This podcast is for entertainment purposes only and should not be relied upon as the basis for investment decisions. Podcast guests and their clients may maintain positions in the securities discussed in this podcast. Hello and welcome back to another episode of the Three Wise Monkeys podcast, a weekly podcast that's all about the markets and investing. My name's Andrew Page, founder of strawman.com, and as always, I'm joined by Matt Joss from mattjoss.com.
Thank you, Andrew. Very happy to be here.
And Claude Walker from ethicalequities.com.au.
Hi, everyone.
What are we talking about this week?
This week we're talking about some new and some old. So we're talking about a company we talked about a little while ago, Appen, and just made a major acquisition. So we'll talk that through. Envirosuite, a company that Andrew's talked about before, has had some interesting stuff happening. PushPay, I'll touch on again. Caught up with him recently. We've got a couple of new companies as well this week. So Claude's going to talk through Clinuval, and Andrew's going to run through Advanced NanoTek. Is that right?
I think that's right. Some very cool sounding names in there. Let's see if there's some cool businesses behind it.
Absolutely.
Do you want to kick us off, Matt, with Appen?
Yeah, sure. So we talked about this just 2 weeks ago. So if you want to hear what's been going on with the earnings results and that type of thing, tune into episode 15. But very quickly, what Appen does, started off as a language translation company. So companies that need anything translated, whatever that is, and then branched out into providing the data for AI and machine learning algorithms. That's been a huge growth engine for them over the last few years, gone from about 30 million revenue in that segment to 300 million. And they've just announced the past couple of days a pretty major acquisition of one of their competitors, Figure 8. So the acquisition's for 175 million US up front, plus potential for up to another 125 million after that.
Quite a bit of change.
Yeah. So it's a pretty big acquisition, and they're a pretty decent competitor. But it's an interesting one to think through. Is that the company isn't profitable currently. It's about 40 million revenue. So that acquisition price is about 5.7 times revenue just for the base that they've committed to.
That's what stood out to me a little bit. Normally when you see acquisitions that, companies love to quote sort of EBITDA multiples, so earnings before interest, tax, depreciation, amortization, and usually sort of see 4-5 times, something like that. So to see almost 6 times sales, you kind of think, whoa, that's a lot. Having said that, though, Figure 8's been growing pretty strongly, just like Appen has.
Yeah, I think revenue was up around 40 or 50%. They're forecasting another strong year this year. And they're forecasting less of a loss, I guess you could say. So yeah, a lot of things. It's definitely growing, but it's a very different acquisition to what we might have talked about before. And we talk about like 5 times EBITDA, as you said. So yeah, it's an interesting one. I think there's a few things to think through. The first is that they're two quite different businesses. So Figure 8 and Appen both providing data for AI, but Appen's traditionally done it by this kind of one and done, get a huge data set for some very big tech companies, and then kind of go back and when they need that repeated, maybe do another order. But it hasn't really had that been as recurring in its nature, whereas Figure 8 had designed a software platform for this, so it makes it a lot easier for small companies and medium-sized businesses to go on there and create, a schematic for what data they want, get that data, and now they're moving into being a marketplace for the algorithms themselves. So it's quite a different skill set. So it's an interesting acquisition.
I think I remember reading that the CEO was saying that, look, we could build this software ourselves, but it might take a few million and 5 years worth of work. So that was part of the justification for it. Not only that, it removes a competitor, which is always nice. And not only that, but there wasn't a huge overlap either in the customer base. Yeah. So, taken, yes, a seemingly lofty multiple, but when you roll it all together, is this something that you look at and think looks like a good move?
Yeah, it's an interesting one. I was thinking through it a bit over the past couple of days. To me, it kind of amplifies the optionality, I guess, the kind of the range of possible outcomes that will happen in the future. It could be much better if the acquisition works. Strategically, it's a great fit. Right. So it's quite a different skill set. You're adding a competency, but it's a lot higher risk than the LeapForce acquisition. It's much higher price. The business isn't profitable. I think we'll dig into it in a minute. A few kind of hairs on the business that they're acquiring, Figure 8 itself. Yep. So there's a lot more risk that it won't go well. I guess your base rate when you're thinking about acquisitions. Most acquisitions are terrible. They destroy value.
Yeah.
And so you need to kind of keep that in mind when you're assessing it. I think it could go worse. It could go much better. It kind of like, widens the possibilities for Appen.
I'll bring Claude in on a second to talk about some of these hairs, but just in terms of this price tag, they don't have the balance sheet to do it, so they're going to go out and raise capital.
Yeah.
In fact, they've already done that with the institutional component. I think you were saying to me before it was actually like really oversubscribed, like by a significant amount. So they had, so we talked about Figure 8 being on nearly 6 times sales. Appen itself is on 7.2 times sales, so it's not cheap according to that traditional metric either, and yet they did offer a bit of a discount for the instos and for the retail component as well. But even then, maybe they should have asked for a higher price given how popular it was.
Yeah, it was only about an 11% discount, the price before that happened. And from what I heard, a lot of the institutional investors were scaled back 80-90%, so it was pretty in demand.
So it's like, you do the maths on that, it's like they could have raised like $1 billion without blinking
pretty
if
much,
they wanted to.
Pretty much. I guess everyone maybe knew they were going to get scaled back. Maybe they put in a bigger order. I don't know how that politics all works. But yeah, so they did a big raise. 285 million from institutions, I believe, only 15 million from retail, so not ideal. We'd like to see a bit more from retail there if possible.
Yep.
But I understand as well they're trying to get it done quickly.
Claude.
Cool. Thanks for that wrap up. I have to say I broadly agree with the strategic nature of the acquisition. Makes a lot of sense. I guess what really interested me about the acquisition quite quickly, the announcement came out and I thought, researching Figure 8 in a little more depth. And when you start looking into that company, one of the first things you come across is this Project Maven thing that they were doing for Google.
Project Maven.
Dun,
Yeah.
dun, dun.
So basically what this was through Google, but then using Figure 8, they were getting people to sort of identify targets for drone strikes or drone warfare.
Like bunkers and tanks and
buildings and
right.
that sort of thing. Hospitals, children's schools, that
Oh
sort
my
of thing.
gosh.
And of course, that's not necessarily a bad thing. I mean, someone needs to teach the drones how to tell the difference between a hospital and a bunker or whatever. However, it does raise some interesting questions. So taking a step back, as an ethical investor, that doesn't mean I have any set rules about what I can or cannot own. But what it does mean is I ask myself, do I want to profit from this activity? Now, that's very, very different from saying, should this activity be allowed? And it's very different from saying, should someone else be able to profit from that activity?
It's a personal question. Yeah.
Exactly.
absolutely.
So it really is, for an ethical investor, the question is about whether they want to personally profit.
Yep.
Are they in a situation themselves personally where they feel comfortable making money out of that activity? There are plenty of activities that I want, like I want a military, for example, but how do I feel about making profit from gun sales? Completely different.
Yep.
I actually think there shouldn't necessarily be a profit motive there. So the question here is whether we're starting to get into that territory, and because AI is a new technology, it's really reasonably untrodden ground in terms of us as human beings developing views on what is good and what is bad. For example, I can see lots of great uses of AI, especially in medicine and the like. And indeed, Pharmaceuticals is planning to use...
There it is. Take a sip.
Yeah. is planning to use AI and incorporate that sort of machine learning stuff into their own software as a feature. So I can definitely see why, and that's going to need people like the people that are the contributors for Figure 8 to help teach that sort of thing.
Yep.
I don't know how they'll do it. They might be actually using proper radiologists' data rather than like people that are contributors. But the point is, AI in itself, I don't think is a bad thing. And Appen.
It's a tool, right? It's how you use it.
Yeah, exactly.
Absolutely.
And look, so also, anything you think is bad, even so, pokies, I think, is probably one of the things I like least about Australia. We have 18% of the pokies in the world, and 2% of
crocodiles
the
and
people.
pokies. Yeah.
Yeah. So, alcohol is served with pokies, and pubs house pokies. Do I think necessarily all pubs are bad? Well, no. I like to go to the pub. I just think pokies are bad. there are people that serve the sandwiches to the guys that design pokies to be more addictive. Do I think their business is bad? Well,
yeah, where do you draw the line?
not really, exactly.
Yep.
So that's the question that comes up with Appen and Figure 8 more specifically for me, because Appen was previously more about text, which I was very comfortable with on an ethical standpoint.
Yep.
About the video, I feel a bit differently though.
So this is one that's sort of maybe in the maybe pile for you because of that military connection.
Yeah, well, basically what I would really love to see would be to Appen to figure out what they themselves as a company think about this kind of business. It was brought up on the investor call, but they didn't really get into it other than to sort of imply, they're looking forward to fulfilling those contracts,
right?
Which is fair enough because they're trying to get this acquisition over the line. But the other little detail that's so important is it's very, very obvious that Figure 8 has had this huge exodus of employees. And I asked the CEO on the call, why? Why have the executives been leaving? And why have the other people been leaving? Now, it seems like they might have hired a bit too quickly, which is why they've lost some staff. But for the executives to be leaving quickly, the CEO, fair enough, of Appen just said, well, we're respecting their privacy. So that's a bit of a mystery why they left. But what we do know is employees left Google because they did not like this project.
Right.
So I don't know if it's the same thing or if it's a different thing. But for me, I just love to see Appen have a position on it, and then I could make a decision on how I feel about their position.
Yeah, and I think there was probably quite a few layoffs as well, from what we could see on Glassdoor, right? So probably, which affects the culture, right? So this company had been losing money. There's some comments, this company isn't going to be around. Maybe it's laid off a lot of staff. That doesn't create the best atmosphere. So that's something to consider, that Appen has to integrate a company where people aren't particularly engaged potentially.
Well, the other thing as well is it actually could be a positive now for the morale at Figure 8 that Appen's bought it and said, hey, you are going to be around.
Yep.
And on the call, the CEO of Appen said that he was happy with the staffing numbers. So that's probably a positive for the acquired company.
Nice one. And I should mention, we'll throw it into the show notes, you got interviewed by SBS during the week on this very topic. So well done.
Oh, well, it wasn't SBS. It was AAP,
sorry.
but then it went out to SBS.
Ah, there you go. Well, even better, right? On the newswires.
Yeah.
More coverage.
Good fun.
What's next?
Next up, we've got Envirosuite.
Oh, Envirosuite.
Absolutely. Yeah, why don't you give us what's been happening?
Okay, I tell you what, not a lot's been happening, really. But except for the share price, which is up about 70% since the start of the month. So it's a very big position for me. I'm very happy with that, obviously. But you need to put all of that in context.
So my question is, have you done a victory dance?
No, because there was nothing in my thesis that said this thing's going to go up by 70% in the next month. And I think that things may have got a little bit carried away. I'll come back to the valuation.
Even just for your kids or something, just a demonstration of celebration.
Well, God bless my wife. I did mention it to her and she goes, yeah, but don't you always talk about, fluctuations and how it doesn't mean anything in the short term? I was like, just let me have my moment. God damn it.
That's only when it's down.
That's only when it's down. That's the old joke. What's volatility? It's what stockbrokers call down. So look, we won't rehash the thesis. You can go back and look at episodes 12 and 7. We've mentioned it a few times before. But really what lit a fire under this thing appears to be this announcement from the company in regards to Tata Steel, one of the world's largest steel producers. It has adopted the Envirosuite platform for one of its UK ports, Port Talbot operations, to manage air quality. So they didn't give financials. I don't think in and of itself it is super significant on that front. It is strategically significant in the sense that this is the first in the steel manufacturing sector, the first major manufacturing contract win in Europe, which is also really great. And management said in the announcement there is significant, quote here, significant potential for further contracts in the sector. So I think what it said to the market is a couple of things. One, there's a whole new vertical out there where this is applicable. And two, we are dealing with some very, very, very big clients. So for example, if Tata was to find this rather valuable, there's a lot of operations that they could roll this out on. So that was really great. A little bit of interest here. They did get a speeding ticket from the ASX because shares were up about 5% the day before the announcement, which always makes you think, who knew what and when?
I think it was more like 10%.
It was a 10%, was it? So that was interesting. As for the price, it's interesting. So obviously, you listen to those previous episodes. I was very strongly making the case that things were undervalued. You look at it where it is now. So we've talked before about this aspirational target they have. They're expecting to double their recurring revenue component by for this financial year. And they expect to do that again. So based on what they've done, that's about 12 million in recurring revenue by the end of 2020. So another 15, 16 months away or so. Yeah. So shares are now on 5 times that forecast sale. So there's a lot baked into this. In a lot of ways, 10 cents to 17 cents doesn't seem like a much. Percentage-wise, it's very big. So it is. There's a lot of momentum, I think, behind this thing now.
Well, for a bigger software as a service company, 5 times forecast sales is not necessarily too expensive. I mean, compare it to some others out there, it doesn't look too bad.
I was going to do that. In fact, a Nearmap I had a quick look at is 19 times its recurring revenue. Xero's on 11 times its recurring revenue, but they're a lot bigger, more established. Yeah, there's a different stage of their journey.
Yeah, but if anything, I can't believe I'm now in the angel for Envirosuite role, but
things have
if
changed.
Anything, they deserve a high multiple when they're really small and growing. However, I should probably note, since I'm singing its praises, I actually sold some Envirosuite today, as I did yesterday. And the reason for that was quite simple. It's just, if you look at their balance sheet and their cash burn, it looks to me like they have about a year before they would quite urgently need to raise capital.
It's going to be close. So they have recently said they expect to be operating profit positive or cash flow positive by the end of next financial year. But it's going to be close. It's going to be close. About $9 million in the bank.
I feel like close doesn't cut it. You just need to raise then.
There's a significant potential. Plus, they have hinted as well at the potential for further acquisitions, which will almost certainly guarantee that will be the case.
What do you think about the gross margin for the business? Do you think that's comparable to some of these other software companies?
That's a really good question, because for a long time they were really talking a lot about how they're device agnostic, any kind of sensor can be plugged into it. Now they're talking more about their own eNose device, which they got through NanoTek. And what they're telling us is a lot of their customers want an all-in-one solution. So actually, can you guys come? Yeah, we love the platform, but can you just set everything up for us rather than us having to go and work it all out separately? So to your point, that is going to lower the gross margin. How much? It depends. Like the software is going to be super high margin. The device stuff's going to bring that back down. I think that's about 25-30% sort of commercial margins in that space. How that washes up will depend on the exact balance. Good question, though.
Yeah.
But anyway, look, that's all there is to say on that. We will continue to watch. Bear in mind too, I've been with this for about a year now. This investment, I've been down as much as 50%, and prior to this month, up as much as 30%. So this thing could be 5 cents next week. It could be 25. I think if you're an investor in this for the long term, which I am, I'm really got my eyes set on where this thing is 3 to 5 years. So bear in mind, if you are interested in this, super bumpy ride ahead.
So I think the other day it was up about 25%. I asked you what's going on, and you just said it's up 25%. Like there's no news.
That's right. That's a Tuesday,
which is very fun. I feel very happy. But where do you get off the ride? I guess is there a point where you think like if it just goes up with no news? I guess if there's news, you might be able to justify the higher price.
I'm already getting off the lot. I do have some. I do still hold some.
Well, I said to you earlier in the week that I thought, the closer it gets to 20, the more I'm thinking of lightening the load a little bit. I'm also very mindful too that like when without getting too much into the weeds here, whenever you're trying to work out what is a fair price for a company, if you're looking at like a Woolies, for example, and you can sort of thumbsuck some mid-single digit type, you're not going to get these really wide swings in value. Like if I was to say to you, Matt, I've got an intrinsic value for Woolworths that's $482.17, you're going to laugh me out of the room. Mm-hmm. Likewise, if I say it's only worth $3.22, it's not plausible. That range of possible outcomes is very narrow. When you're talking about very, very small businesses with very, very fast top line growth, very, very high degrees of operational leverage, very, very big long runways, you can plausibly, and I've heard other people do it, say, this thing's worth 50 cents. And others say, no, it's worth 7 cents at best. And they both make compelling cases. So my point here is that I think that any sensible investor has an idea of value, But with these companies, if you are sort of in this for the long term, you don't want to be too clever about it, because as we have seen before with Promedicus, take a drink. If you get too smart on something, which I've done in the past, you get too clever with it, and all you do is end up selling something that, you know, in 10 years' time is worth 15, 20 times as much as you paid for it. Let's move on. PushPay.
Sure, yeah. Chat about PushPay. So we've talked about PushPay before. Provides software for the faith sector, particularly in the US. I caught up with the team recently. They were coming through Sydney, so I just thought I'd give a bit of an update. It's been an interesting time for PushPay. They're just tipping into profitability. So their last results that they released last quarter, cash flow went up, or cash went up, I guess, for the first time.
We should just mention quickly, they're on a funny reporting cycle, aren't they? So their full year
the New
will
Zealand
end.
reporting cycle.
Like I said,
Is that normal in New Zealand?
So their full year will end at the end of March.
Gotcha.
So they've given guidance to be EBITDA positive, so operating profit positive for that full year.
Yep.
Which is a pretty big change, and it's interesting to decide what happens next with the company, I guess. So the kind of feedback that I got was they see themselves at the efficient frontier for their sales force. They're regularly gaining new churches. Their large and medium churches are up about 17% year over year. So they're adding a steady stream. Plus their kind of back book is growing quite fast. If you look at like a cohort that they signed up 3 years ago, last year that probably did extra revenue of about 25 to 30%. So
it's amazing.
There's a bit of leeway there, but it does mean that they can't just cram more resources at the front to kind of goose sales. They're kind of about there at the moment.
Gotcha.
Just for listeners that might not know, what's the efficient frontier of the sales force?
That's a very good question. So
I was going to ask, but
efficient frontiers are basically just saying that there's a certain point where your kind of unit return on investment starts to fall. So they're saying that they're at a point where if they added any more salespeople, it wouldn't be a good use of capital. They could add a bit more revenue, but it wouldn't really justify the cost. They're kind of there. They're at the right balance.
That is so refreshing to hear a company talk like that, because especially with such a short-term focus with so many, you'd think it's just like, hey, let's just juice the hell out of this thing. You know, everyone's only, especially in 2019, we're only caring about the top line. Who cares about profit?
It is good that they want to do profits, but also that is like a tad bearish on. I still hold PushPay shares, of course, and I'm excited about their impending profitability, but it is a little tad bearish in terms of growth may slow.
Yeah, it's a different strategy, I guess. Yeah. So I think it helps that the founder and CEO owns about $100 million worth. He's building this for the long haul.
Skin in the game.
But I think that the flip side of it, so revenue growth will be slower than previous years for sure. But the flip side is I think they can continue adding at a pretty steady rate that they have been. But because they don't need to add any more salespeople or really any more staff, they get pretty big operating leverage out of that. So, operating revenue is at about 120 million.
Words.
Yeah, that is exactly what we like to see. Yeah. This is an inflection point.
So revenue is at about 120 million now. So, it doesn't take too much more for, another 10 million of revenue. Almost all of that falls to the bottom line, or a very large chunk. So that's kind of the point they're at the moment.
So I might just add for any new listeners is that I think I think you, Matt, as well, both own PushPay, as we also both own, and you own it as well, Andrew.
It's part of my do what Matt does strategy.
Yeah, sweet. So all three of us own PushPay, and at least me and Matt own Appen.
Correct.
No, next question.
But yeah, to Claude's point, it is like the growth slowing it's kind of in this transition stage before it gets to profitability. So I'm not saying it's about to set the world on fire, but an interesting thing is I think this profitability will potentially allow them to make some acquisitions. So there's a very fragmented space. The church software market, a lot of it's like a smart techie guy who goes to church, created something for his church, rolled it out to a few others. They're not particularly sophisticated often around sales and marketing, and just the quality. Like one of the big church management systems just runs some servers from like a remote location. Like it's not on the cloud, you know? Right. So it's just a different level of quality, which opens up some options for different things that PushPay could acquire and grow that way.
But will they ever go to the cloud, or do they like their remote servers for reasons we don't understand?
I don't know. I won't get get into that. I think, but I think there's a few different options for them. So they could buy a new product and kind of cross-sell that. There's some some of the better products in the space, or they could buy potentially a church management system and kind of build that out themselves and get the customers up front. There's a lot of different things, a lot of different moving parts they could look at. So I think it's an interesting time. They're kind of playing the smart capital allocation game and operating leverage game.
That, yeah.
But it's a very sticky business. I also touched on the recession. They did a bit of work around that because they're thinking about how they forecast their cash flows moving forward.
What do you mean by the recession?
The last recession,
the
GFC.
Okay.
So it's just something that's come up with me is thinking how much would they be impacted if there's another big recession in the US, because giving could go down. And their kind of some rough numbers was that it was around, during the last time, giving fell around 10%.
And we should remember that it was a pretty serious
pretty bad. It was a
thing over in the
worst
US.
Recession since, it's much worse than Australia, which
we didn't have a recession.
But if that was kind of the worst impact, it's not to say it would, because it could be a different mix of donors.
So how much did it pull back?
10%.
10%.
Yeah,
Wow.
I think if that was the worst, that would be very doable, I guess, very easy to survive.
Yeah.
So yeah, a lot of good kind of steady, sticky software business.
Awesome.
And they're cashed up as well, aren't they?
Yeah, so they're just they've got about 12 million in cash now, but they're going to be generating cash from here on out, and then I think they'll put some of that towards acquisitions potentially.
One to watch. Let's talk about, how do you pronounce it, Claude? Clinuval?
Or how do I pronounce
How do
it?
you
Or how
pronounce
is
it?
one supposed to pronounce it?
Both.
I think I say Clinuval, but I have
Clinuval.
no idea what the preferred pronunciation is. Maybe, hey, if you're the CEO of Clinuval, hey, take my call. That'd be great. Anyway, so look,
Tell us what they do.
can you imagine how ecstatic Clinuval Pharmaceuticals shareholders feel about its 15,050% share price increase?
Over what time frame?
That's 5 years.
I'll still
I was
pay that.
alive then. I was looking at stocks 5 years ago.
I love it.
That could have been me. Anyway,
That was then, this is now.
yeah, so that didn't happen. I didn't make that amount of money. Some people did.
Wow, it's amazing. Is that a story of a usual biotech company burning through shareholder
No
money,
way, it's just
and then they
it's
just
one of the-
finally hit?
It's
and
just one of the purest biotech Australian companies I've ever seen. That
Right.
5-year story.
Tell us about it.
Clinuval develops a drug that is used to treat, and I'm going to absolutely not manage this pronunciation, but used to treat erythropoietic protoporphyria.
Is there an acronym we can get for that?
There is. We're going to call it
Sounds
EPP.
EPP.
That's better.
A rare genetic disease characterized by severe intolerance of light by the skin.
Oh,
jeepers.
right. Yes, I know these guys. Yes.
And so basically they've got a drug which they brought through the whole testing processes. Can it help people? Yes, it does. Right. They got approved in Europe, and that's where they're selling it now.
Yep.
And basically, about 2016, they crossed over from loss-making, developing a drug, to actually getting sales and making a profit.
Payday.
And in hindsight, if I'd properly absorbed Matt's lesson about inflection points back in 2016, I would have been absolutely all over it, because it came up in my radar. And what I did was I anchored. I was like, I looked at this, 6 months ago, and it was $3, and now it's sort of $6. And it was passing an inflection point. So I thought, it's past the inflection point, but now it's priced in. But that's the thing, right? The monkey brain does not think exponentially. It thinks
Absolutely.
Linearly.
I'm quoting the wise monkey here.
Did I say that? Oh, sorry.
That's a good one, Andrew. Yeah.
But basically, it's a beautiful example. That was me. My monkey brain took over, and I thought linearly, and I didn't realize that despite the doubling of the share price, there was plenty more to come.
So they've got a product, long time in development, burning through a bunch of cash, got approval.
Got approval very quickly.
Selling it now, I assume, covered with the usual patent protections and
for a
intellectual
decent
property
amount of time. So
rights. And so
anyway,
they're selling this for them. They're just minting it
just in
now.
Europe. Well, they're hardly minting it, but they're selling it in Europe. They very quickly became profitable. They very quickly started paying a dividend,
Okay.
which I don't know what more you could want. And well, you guys seem less excited about that than me, but I'm like, yes,
Oh, it's
you
a
like
good sign.
giving money to shareholders. That's like the opposite of most biotechs.
That's true. For a biotech, paying a dividend is very
It's
rare.
unusual.
Yeah, I better double check. Yeah, yes, it's a very tiny dividend, okay? 0.1%.
Okay.
But it's
Okay.
symbolic here, okay? And also the share price has gone up a lot. If you
Yeah.
bought it back then at $6 or prior to them becoming profitable, you'd be happy with the dividend.
Are they in the US?
No, so they're not in the US yet. And so that's sort of, I guess, what the speculation and hope in the share price is now, except of course now it's a much better story. I should add here, Ethical Equities has helped popularize this stock. Matt Brazier, actually finally got me to overcome my anchoring on this when he initiated coverage of Clinuval back in September. So I bought shares in, I think, the high teens in terms of the share price in the dollars. And now they've done a decent set of results. Plus, I think more people are paying attention to it. It got bigger, fun starting look, etc. It's $28 now, the share price.
So is it too late for someone like me who's missed all of that good stuff? Can I jump on this train now, or have I missed it all?
As a monkey, I think linearly, and I therefore think it is definitely too late. And indeed, I did actually take a little bit off the table myself, but I'm trying to have faith in Matt's inflection point theory. So I've held on to most of my holding there, and we'll see how they go. I want to at least see what happens when they get sales in the US.
Okay.
Claude, is it just the existing drug, or are they under development for new drugs, and how do you kind of think about that? I guess that's a pretty tricky thing to value if it is.
So I don't want to pretend I understand their full pipeline properly when I don't, but as I understand it, they are pretty much focused on either this exact drug or slight variations thereof that could treat similar issues with skin and light.
So low technical risk potentially if it's a similar drug and maybe a similar market too, I guess.
Yeah, exactly. Well, they've definitely got a plan to go beyond the US. I think the worst part of their plan, according to a friend of mine, is to try and get approval in Asian markets, because she says, no one's going to go for the drug that darkens the skin there. And I don't know if that's true or not, of course.
An aesthetic consideration.
I mean, it might be that it's actually better that way than have a health issue.
You know what always puts me off about these kinds of companies, and it's not to be critical at them, it's the nature of their industry, is that, developing therapeutics, drugs is extraordinarily hard. It's very, very, very costly, and there's huge and massive amounts of risk. And so even the very, very successful ones, they spend ages and ages and ages trying to get it, through the gatekeepers. They finally get one through. Yes, they make $1 squillion then, but they kind of need to make up for all of the wealth that they created, and they've only got a limited time to make that money before it becomes a generic and they lose their patent protections. So it's kind of it's just a very tough, very lumpy thing. And when things go off like this, people start going, and they can do this and then they can do that, and they can get, yes, but that's a different regulatory process, and we know what that tends to be like. It's like the dog that finally catches the car. It's like, oh my God, I've got the car. It's fantastic.
That is a very harsh characterization of one of my shareholdings.
I'm speaking more.
I don't think that dog goes well, mate.
I'm speaking more generally about the sector. So it is something that I have a ideological objection to, but I'm happy to be proven wrong.
Look, so you're absolutely right. That's the big risk. That's the Matt Brazier is still covering this for Ethical Equities. You can read his comments there. He's worried about that exact risk you said.
Yep.
The flip side of that for me is drug companies often find a way to alter the drug slightly to sort of renew the patent. The other thing is there's obviously some sort of market inefficiency with generics. Otherwise, all of these US drug companies wouldn't be able to just ramp the price to whatever it may be. So for these very rare diseases, you don't see this very fast generic competition because generic's low margin, you need volume.
And it's probably not a high incidence.
Why are you going to go into production of generics of a very, very rare disease unless they are so foolish as to put the price really, really, really high, which I hope they would not do.
Right, gotcha. All right, let's finish up with...
it's already very expensive, I should say.
Okay. Advanced NanoTek. So the ASX code here is ANO. Now, I don't own shares, but Claude, I believe you do.
Yes, this was a lucky one for me. So what happened is a while back, I was perusing Andrew's website that he constantly goes on about strawman.com.
Excellent website.
Tell your friends.
So one of these, like, actually there's a few really good contributors on strawman.com. Like, you could literally pay, thousands of dollars for a service that would give you less good.
Dude, I got to get
some
you
of
on,
these
I got to
guys,
get you on the marketing
you've
team.
got to like, some of these guys are really, really good.
Let's give him a shout out, actually. It was Anthill who's done very well from that.
I think a few of them have...
Winnie.
Yeah.
And I'm gonna. And these are guys who have absolutely smashed the market.
Yeah,
they're
really
topping the
good
leaderboard.
guys.
Lord knows they're beating me.
Yeah, you'd pay attention.
Let's run through what the company does.
I guess I'll get ahead of ourselves.
We did the victory lap already.
Well, it's amazing. So it came onto the platform about a year ago. I didn't pay much attention to it. I should have. And these guys were basically talking about, look, this is a business that manufactures zinc nanoparticles, and already, right, okay, that doesn't sound like super sexy. But there's these zinc nanoparticles that are basically used in sunscreen, but also cosmetics. And the advantage of it is that they have a very, very broad spectrum protection against UV radiation. So they're very, very, very effective. In fact, way back in the day, you remember watching the cricket when you were a kid, all the cricketers had this white stuff painted on their face, the zinc, 'cause it's super, super effective. Trouble with it is, not many runway models probably like to paint their nose white. There's an aesthetic dimension to it. When it's in nanoparticle form, it's invisible. So you can put it in sun creams and everything else, and it just looks a lot better.
Really quickly, the bizarre thing was when I first researched this years ago, it was called something different then. It was still ANO.
Yes.
And I was worried about the ethical risks of nanoparticles. Turns out that's flipped on its head now, and it seems like the chemicals in the non-zinc stuff is probably
bad for the
worse
for the reef and that.
Well,
kind of stuff,
I don't really know if it's really bad for the reefs. I think,
well,
whatever.
Hawaii...
It's still not. There's still chemicals that aren't good for you.
Yeah.
That's the thing. It's like, I don't think the nanoparticles are actually that bad at all, really.
It's like chocolate. 1 week it's good for you, next it's bad for you.
I actually think it's a rabbit hole we won't go down, but nanotechnology, there's a lot of unknowns with that. So there are certain things that I would not know that the science is absolutely sealed on that. They swear
But
that it is.
It's
that
part of why I bought, because I actually, back when the momentum trader Asad Tanous asked me about the stock, so I did a bit of research on it, and I delved right in just for my own interest, and actually I learned a fair bit about the zinc method, and now I happily put zinc stuff on me.
Yeah, and well, the other thing is as well is that so a lot of the chemical active ingredients in sun cream do have bad environmental impacts. Hawaii, for example, has banned the use of certain sun creams because of that. They reckon it's damaging the reef, etc.
Well, I know I'm taking your time on this, but
No, please, go
I
ahead.
also wish they'd ban those chemical stuffs from my local waterhole where I always go to chill out and think about stocks.
So we talked before about BWX and Sukin, and then there's a very big trend in sort of natural, environmentally friendly kind of thing. So this tailwind is pretty strong. What's interesting about advanced nanotech is that there are only a handful of people who make this kind of stuff. They seem to always show this slide in this presentation deck, which shows that theirs is very effective. They've been working away at a long time in terms of the IP around how they mix that, how they produce it. So these guys only tipped into profit in 2017 after 14 long years of just losing money, which is another reason I kind of thought, it's one of these gunner companies. They're always gonna make it.
That was Anataria was the gunner company. Advanced Nanotech, mate. They're doing it.
So they did it, and what these guys on Strawman were absolutely correct on is they actually saw this inflection point. It was like, yes, they've put in the hard yards, they've got the production, the demand is coming through, and sales have grown phenomenally. So just in the most recent half, I've lost my part in the page in my notes, but it was 85% up in terms of their sales. Profit was up 180 something percent. And they've also made some big investments in further capacity. So they can produce about 15 tons of this zinc nanoparticle powder per week. That's going to be ramped up to 40. They've got some very big contracts locked in. So it's the share price has gone from 50 cents to $3, whatever it is now, but it's actually been supported by some very, very strong, solid growth in the fundamentals as well.
Yeah, so I don't want to say on the share price. The 5-year, I like to look long term now. 5-year, 2,627%.
That's amazing, isn't it?
Imagine that on your score.
And here's the other thing that I've got to tip my hat to these guys is that we were talking about before, they could have locked in a 30% profit, a 40% profit, 100% profit, but they're very much based it on their valuation. Jump onto Stroma and you'll see the consensus valuations. It's about $3.18 at this point in time. So actually bang on where the current price is. It's actually entered the Strawman Index of the last week as well. So that's also worth mentioning.
Oh, it's
Strawman
only entered
Index.
it now. Oh, that's
it's in the last week.
That is unfortunate timing.
Yeah, why
mate.
didn't it end before? That would have been good.
I think
would have been nice.
I think that the Strawman Index may not have gotten in as early as it could have.
Well, you know what? It's democratically driven. So people have finally come to the party, and we'll see where it goes. Is it? Have I bought it yet? No, I haven't. I'm looking at it very closely. The shares are on a P of about 45 if they're going to hit what people are expecting this year. Maybe only on a P of about 30 if they're going to do what people expect them to do next year. But definitely a long runway, definitely a nice tailwind, big inside ownership, a very, very good story. A couple of quick risks that I want to dig into before I'd be comfortable with doing it. Again, whenever we see companies making good returns, that is like a moth to a flame. It attracts other people, so you've got to imagine that others are going to ramp up their capacity as well. So that's demand supply thing could change a little bit. These guys are dealing with very, very big customers, so very, very big, beauty companies. You got to imagine when they came and say, "Hey, we want to buy 15,000 tons of this stuff. We want to pay this, and if you don't like it, we'll go somewhere else." So there's that component to it as well. There are also potential for rising input costs and all this other kind of stuff. So very, very interesting, very, very excited. Big hat tip to all the guys that did very well on that. I'm just going to dig a little bit deeper before I get comfortable on it.
Excellent. And I should add that your Strawman Index, I believe, is soundly beating the market. I saw you tweeted that.
Yeah,
So even without this help,
yeah,
so that's really good.
I think it's amazing. Like, that is a free idea generation tool. If you just blindly followed that, the Strawman Index forecast, every time something adds into the scorecard, if you just bought it instead of like whatever other random stock someone told you to buy, you'd be beating the market and you'd be doing well. So
it's about 12% up over the last year or so versus the market. So I'm really happy.
It's a sandbox, I'd always say, look, that's great idea generation. Try to beat it. Yeah, of course. Yeah, try to get
most
the good
people
ones.
aren't, because there's power in the hive mind, as you like to call it.
I love it, mate. The hive mind. I'm really glad to see that people have really chipped in on that.
Oh, you guys, you're really throwing me some love. I love it.
It's been like a year now,
Thank you.
right? So
I'll send you some cash.
It's short-term returns only, Andrew. We need to wait 3 years.
Plus returns are not indicative
before we give you any credit. 3 years. Well, not you. Also, that's the thing. It's not your credit, is it?
No, it's not me.
It's the guys that have chipped in. So thanks to all the contributors in Strawman. That's
totally. Thank you very much, guys. We better wrap it up. It's been a really great episode. Lots and lots of stuff discussed. We will, of course, be back next week with a whole bunch more. Matthew, any closing remarks?
No, thanks very much for listening. Leave us a rating or review is always appreciated.
Yeah, thanks, guys.
And don't forget, we are on Spotify now too, so we really need to re-emphasize that. That is, from what I'm told, a lot of the feedback we've got, a much better platform for a lot of people. So if you are using that service, check it out. We're there.
I really wish you had time for my dolphin story.
We'll leave that one cryptically
maybe a bonus episode
in the air. Until next week, I'm Andrew Page. Thanks for listening.
Thank you.
I was taking my lunch break in 4 Foot Swell when a pod of dolphins came. They were catching the waves with me, and 2 of them dived up together, jumping into the air, showing off, as it were.